The Fed's rate hike was the fastest we've ever seen. Now it's off of zero, so I'm not sure I'd even include the first 1%. And what the world expects is 5%, and they'll take a pause. They should. We were a little slow getting going. They caught up. I don't think there's any harm done by waiting 3 to 6 months to see what the full effect of this is around the world. I'm on the side where it may not be enough. The consumer is still strong. Their balance sheet's in good shape. They're spending 10% more than pre-COVID. They have more in their checking accounts. Companies are in good shape, and that's driving a strong economy. But both in April, October, and today, I'll tell you, there are these things out there which are very uncertain. And when I look at uncertainty, there's always uncertainty. Every day of every life is uncertainty, but it's heightened. And it's heightened because of Russia, Ukraine, oil, energy, food, quantitative tightening. Is it going to be enough to raise rates to 5%? And this is having a huge effect on smaller countries, poor nations, those who are reliant on importing oil and gas. And I think those uncertainties may very well mitigate, and we'll end up with that kind of Goldilocks mild recession, but they may not. So I'm still in the cautious side of this one. There are storm clouds which may mitigate. Those storm clouds could be a hurricane. And so I'm saying this stuff I'm talking about, it could be nothing, it could be bad. I'm not predicting one or the other. I'm simply saying be a little prepared for both of them. I'm not sure wage inflation is going to peak the way people expect it to do. Take a step back here a little bit. The lower paid Americans are getting wages higher than the rate of inflation. And I don't think in total that's a bad thing. That's a good thing. They haven't had a pay raise for 20 years. The fiscal stimulus was so large and still largely unspent. Whether 5% interest rates are enough to slow inflation where it needs to be, I don't know. But I talk about one of those uncertainties out there, is it 5%? And my view is it may very well be 6%. Americans moved $1.5 trillion into T-bills and a lot into money market funds, so you have a choice. You're not being locked into that savings account. But I do think you see competition. I mean, for a while, banks were kind of flush with deposits, and now that's not true for every bank. So you're starting to see banks raise rates. As they do that, other banks are going to do it. So I would expect sometime in the next 6 months, you're going to see savings rates go up and maybe some more competitive deposit-type products. I don't always know what the future is, so if I'm prepared for it, I can grow my company through thick or thin. And of course, my financial results will bounce around. And so in terms of crisis, it's having the army to fight it beforehand, proper margins, proper accounting, and then when they happen, you better move very quickly and kind of do the right things. The best example is how resilient the country is. And if you go back every decade, back to 1900, it's been bigger the decade after. And that included World War I, World War II. So the terrible things, the resiliency of the system is unbelievable. It's the type of thing that Warren Buffett refers to. It doesn't go backwards. It may stop going forward sometimes, but it's always growing and innovating. And part of it is this enormously prosperous economy.